Hello, everyone, and welcome to another edition of the Norman Alex podcast. My name is Alessio, and I'm a director here at Norman Alex. Today, we're joined by Massimiliano Sulpizi. Hi, Max.
Hi, how are you?
I'm good, thank you. So, today we wanted to speak about the startup ecosystem. Here at Norman Alex, we work quite a lot on the technology and startup market. So, we wanted to have a conversation with Max to understand what his perspective on the market is. So, first of all, why don't you go ahead and tell us a little bit more about yourself, your background?
Sure. Thanks, Alex, for having me today. I will be very short. I'm an angel, so sometimes I don't play poker. So this what is my game because it's very early, pre-seed and seed. I'm a venture capitalist, extensively work in venture capital, not only founding startups, but we have created, here we are, equitymatch.co, where we support 360 startups from the pre-seed to early stage up to A, B. So what we do for them, we fundraise on their behalf. We have a team fundraising for all our startups today, 280 in our portfolio. We aim to reach 500 by the end of this year. We're already working on releasing 2.0, which will be completely another game, but when we'll be ready, we release the news. We also mentor our startups, our founders. We give them all the tools they need to create from scratch a model that can work and can make money and succeed.
Okay, good. So that's
venture capital. So we don't move on the private equity because I don't think we have time.
okay. Good. So how's it been for you until now? What are the main challenges that you see in the fundraising market mainly?
Depends. We are very much worldwide based, and so we work in many continents, from Asia, America, we cover South and North America. Each continent is a different game. US is extremely advanced, so fundraising in America is not a big problem, although not everyone can be funded. Fundraising in Europe is trying to fill the gap, but it's still massive. Even Italy is I was reading yesterday, CDP is creating another 8-9 billion to give to funders the next 2-3 time.
And we just had one of our latest unicorns with the Satispay as well. So it looks like it's picking up, right? Also in terms of size.
Takes time. Venture capital is full 100% risk. Europe is not that keen to risk. This is why the big gap is we don't take too much risk. Venture capital is 100% risk. You are not backed by any security. There is no collateral except the equity you are buying, unless you use some convertible notes. But anyway, there are not that many tools that can protect you to fail.
Yeah,
there is nothing we can do. Let's talk about Europe. Where Europe has, in my opinion, the major problem is funders still think too small. So they are very much inside their country. Even, of course, you need to start in your country and after scaling outside. But I'll give you a very good example in valuations. The same company, absolutely same company, from Europe to America, probably in US, you have 4 times valuation more than Europe. Because the amount of money, because the amount of cash more than the market. Europe is a huge market. So when people tell me the difference in the market, I do not agree at all. We have probably the biggest market by far, even bigger than America when it comes to transactions. So it's about liquidity. It's about how much cash there is on the market, because in the end of the day, follow-up is done by cash.
Yeah, I agree 100%. So as you know, I used to work in a startup before, right? So I've seen it from the inside, and I think that fundraising itself is by far one of the biggest challenges for founders, for CEOs, country manager, whatever it is. And so Since you've been in the game for many years, what are, just a few tips or the main advice you would like to give founders to kind of make sure that they can secure not only funding, but also the right funding, right? Because it's always important to find the right partners. So what's your idea on that?
Founders should not rush. First of all, when you start your business, you have to have some money saved.
Yeah.
Don't believe you can start tomorrow and after tomorrow someone will give you the money, because, I mean, in the end of the day, nobody's stupid. So investors, they will give you the money if you commit your money, even 2,000-3,000. You need to commit something. You need to start with something. You need to get some traction. And when you got the minimum, I'm not even talking MVP, I'm talking about a beta. To show to someone, go out and show. If you show too early and you pretend to sell on paper, that's a very tough selling. And maybe you're going to waste 1 year of your time that you can use to build up a decent beta, a decent prototype, whatever is going to be your business. And from then, start working, talking to investors. I do believe it's very, very wrong when you create from an idea, you just work out and wasting 2-3 years of your time just searching for money, because this money is very difficult to write, and you end up in nothing. When you approach investors, you need to make sure that you are doing your due diligence as investors do their due diligence, right? So make sure in your cap table at the very beginning, have the right one. Because if you get the wrong investors only because you're rushing for money, you already have destroyed your startup. So just go home, because you're wasting again your time. Venture capital stuff. The point is, when you start a company, many founders believe they start a company because they want to be rich. So now, if this is your mission, again, stay home. Nobody is giving the money because you want to become rich. That's a very misconceiving and concepting the way you should be an entrepreneur. Entrepreneur are the one who fix problems. Entrepreneurs are the one who find a real problem and find an effective solution for the problem. The one who want to become rich, I mean, then at least they're not for venture capital for sure.
Yeah, I agree 100%. And it's often, many companies that fail because they don't really have that purpose, right? They don't really have that vision.
Company fail because they don't have the right solution. Company fail because they are not fixing any problem, because there is no problem that has to be fixed. They believe is the problem is not there. Company fail because the market they believe is there is not there. Company fail because the management is absolutely poor. At the very beginning, many founders, they're not managers. They never will be managers. So when you start a company from the small, I can't say nothing easy, but it's easy to manage something very, very small. As I said, to all the founders, some mentoring, it's very easy when you do not pay anyone. Until you do not pay anyone, you don't have an employee, you are not any company, you're zero. You are just a concept. If you run a business yourself, your friend, co-founders, you are not pay yourself, you have no bills, no liabilities, no receivables, or maybe some if you get some money. But again, that's not a company at all. When you start having 5, 10, 15 employees, at that point you need to pay them. They start the game. Because if you don't make money, you don't find money, you will fail. If you don't have employees, you can run it for another 20 years. You're just yourself. You can make enough money outside. Many founders, they have 2-3 jobs and they run the business, but this can go forever. One day you need to decide to quit your job and dedicate 100% of your life, not your time working. This is a very tough job. You need to dedicate 100% of your life, 20 hours per day, because when you start the company, you can't work 8 hours per day. Even 10, 15 is not even enough to take off the business. And if you get the money from others, you need to understand that you own something to others. That money are not for free. That's a different life. Venture capitalists, they want performance. Performance is not 10-20% per year, but it's 10-20% per month. Not very few people can grow 200-300% in 1 year, regardless of the money. You need to be very capable.
And you also need the right execution, right? It's always, there's a big misconception about, first of all, the role of the founder is this like cool, vibe around, but it's not really cool at all. It's really grind every day. And the startup life as well is like that. And just to quote one of probably the biggest entrepreneurs in the US is Mark Lowry, right? He used to get Walmart, he founded Jet.com, then he was acquired, now he's a serial entrepreneur, like the symbol of this kind of figure. And he always says vision, capital, and money, right? So vision is the founder. So the idea is his, but it doesn't mean anything if you don't have the capital and the money. And this is where we both, Norman, Alex,
Yeah,
and
no,
with the
I'm
match can.
another one. Vision,
Yeah,
capital, money, and execution. Without the last one,
execution.
goodbye.
Exactly. Yeah, yeah,
Endless
100%.
money. There is no way you go. You
Yeah.
will finish in the morning and close your company.
Yeah, that's absolutely true. So we're living in a really strange times, right? There's a lot of uncertainty in the markets, the stock market, the economy, the inflation, the war. So we are seeing a lot of companies kind of, downsizing, like big companies, like even Meta, the performance is not there. So in this kind of ecosystem, what do you think startups can do, and how do you see startups going forward, in terms of solidity, in terms of funding? Is that going to be affected for you?
I mean, when it comes to venture, first of all, not all startups can approach a venture capital. That's a choice.
Right.
Doesn't mean you need the venture capitalist money to start up a business or to grow, even to be successful. Actually, I believe the rate of success outside venture capital probably is even higher because you have less pressure. Probably performance won't be higher, but success in terms of going forward, do not fail, probably is higher because you are not pressured by having this absolutely outstanding but very tough performance. But the point is, venture capital fund that have, because you need to start for the venture capital funds who give the money to the startups, they who starts today maybe is complicated to raise funds, although we've done this forever, still gets funding from LPs. So when you have your VC funded, you have done this before this recession, because we are already in a recession.
Yeah,
you still have the money to invest. For the investors themselves, that's a good time because valuation are pretty much lower than before. So actually, you're even better to invest money because you're investing money in a downside economy. So economy that is going, we're in a bear market. So when you invest in a bear market, it's better because in any way, valuation are not linked to the stock market, but get some form of, let's say, follow-up for what the stock market is doing. So for investor side, actually, I do believe it's a good time because in fact, there are a lot of startups funded. For the founder side, it's complicated to push valuation up. So I can tell to the founder, still keep fundraising because there is so much cash in the market because we've been under QE for more than 10 years. So there is billions and billions to be invested. Venture capital must invest this money, otherwise they don't get their fee and they don't get any return. If you don't invest the money has to be turned back to LPs. And of course, you can't push valuation that much because the market doesn't allow you to push that much, but get the money you need to go. When it comes to valuation is nothing. When you go to investors, okay, I will give you 20% for 5 million, and you are telling them your company is already worth a lot of money, you need to have the fundamentals to support this valuation. When it comes to valuation in startup, let me say that's a big laugh. Because many times they come to okay, I want 2 million, I give you 10%, which is your valuation is 20 million plus money. They say, based on what? Hey, because I'm going to get 10% of that market. Based on what? That's your imagination. Maybe you can't even penetrate 5% that your obtainable market. So it's not that simple, but they can keep going because even though we are in recession, because we are complete in recession, any doubt, there is a lot to be invested.
Yeah.
And maybe accept a lower valuation, because in the end of the day, you don't decide valuation. Who invests decide valuation, and accept probably a less protective term sheet. But again, when it comes, when you are very early, pre-seed, seed, and very early stage, don't bother yourself too much. Your company is worth nothing. Today,
you should really have long-term vision, right? So you shouldn't really
a
worry about
long-term vision and
right.
make sure you have the right investor. Don't bother yourself too much with how much is worth it, because in the end of the day, it's worth nothing. That's an idea. 1, 2, 3, 4, the first 3-4 years, we are still talking about ideas.
Yeah.
And poor revenue, because the revenue are very poor. Even if you make 50K per month, that's nothing. That's absolutely nothing.
Yeah.
You can cover your burn rate, the monthly burn rate. So again, you're still making losses. Yeah, and this is how it will be for a few years. So don't bother yourself too much. You need to have the longer vision. You're right, Alex. Go for the long vision for 5-10 years time. And again, make sure you are tough enough, because being an entrepreneur is a tough job. I mean, it's seriously tough. Right. You're right. Don't believe you're Elon Musk. Even Elon Musk took so much to be where he is today. He made many mistakes,
and he also failed many times. Yeah, 100%.
Anyone. I did, and everyone.
It's part of the progress. Yeah.
You had to fail. I'm sorry to say, but you had to fail.
Yeah, I think we are here a bit, in Europe at least, right? It's much more risk adverse in terms of culture. In the US, it's not like that. So that's probably why the startup ecosystem was a bit more prominent and has been. But I think if you change, right, your mindset and your culture, and you see failure and mistakes as part of the progress, I think it's going to be.
The problem in Europe is the system itself.
Mm-hmm.
So take Italy. We are both Italian.
Yeah.
If you bankrupt in Italy, you are out of the credit market for 5 years' time. So what this guy can do? Nothing anymore. He can't even take, not even the credit card. That's the system. Mm-hmm. Ridiculous. But this is how we are today. So you can only go pride. And even if you go pride in Europe, how many times do you fail? 2 times. Oh no, that's very bad. But that's the beauty. You need to fail. If you do not fail, you have no understanding of anything, you will never succeed. You need to be so lucky. But even founders who succeed in the first place, with the first startup, I would be very concerned, because they don't have the mindsetting, the problem solving. Most of the time they got lucky. No, they're not genius. I mean, to be honest, I don't believe in genius. I believe in when it comes to startups. I've seen very bright guys failing miserably because they were not tough enough. They didn't accept to stay up at night until 10 o'clock. They didn't accept to stay home while the friends and family go on holiday, because that's your job. You need to be home and in the office, wherever you are at work. They miserably failed. Others, less smart, but very hard worker, very, very big-minded, they succeeded. So,
yeah, it's about the mindset. Absolutely.
For everyone, I had nothing to do against Zuckerberg. I'm not even to talk about it. But Facebook, I mean, Facebook was not the greatest idea on the planet, but it is what it is today. What Meta, as you want to call it.
Yeah. Okay, listen, Max. So it's really been a pleasure to speak with you. If you just want to leave a bit of an information where we can find you, where we can find Equity Match.
I'm spending my time to. This is my first startup myself, Equity Match. So I'm spending all my time working full time on Equity Match, not full time, but say 80% of my time.
Yeah.
Equity Match is very young. I'm holding Equity Match like my boy or girl, give any sex. And everyone who wants to reach me, max@equitymatch.com if they want to email me, or they just go on equitymatch.com and we have 20 people working already full time on this project. We are more than happy to welcome any startup that want not only to raise money, but pretty much to understand how venture capital works, and having first-hand tips and advices how to approach the venture capital, from angels to funds, where they are.
Good, great. So thank you for the conversation again. It's been a pleasure. And thank you everyone for listening to this podcast. Have a great day.
Take care. Bye.